Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm your host, Jen Sanasi, along with my co-hosts, Emily Parker, CoinDesk's Executive Director of Global Content, and the TIE Director of Content, Lawrence Lewitton. Good morning to you both.
Good morning. I guess you started the morning with a prayer.
Yeah, a little false start there, but we're going to get right into it. Okay, we're going to check out the top news stories in just a bit, but first let's take a look at the markets, starting with Bitcoin. The CoinDesk Bitcoin price XBX index is at 30,228, holding above the 30K mark this morning. Let's see if Ether is following suit. The CoinDesk Ether price ETX index is at 1,916, also holding above that $1,900 mark this morning after taking a little dip yesterday. And DeFi assets, the DFX CoinDesk's DeFi index is up 5% at 130. Looks like markets don't care about that new Senate bill we learned about yesterday that said the U.S. wants to regulate DeFi like banks. Let's take a look at our top story. Lawrence, Emily, crypto trading firm NYDIG thinks spot Bitcoin ETFs could bring $30 billion in new demand, thanks to filings by BlackRock, Fidelity, and others. What do you guys think? Emily, do you think $30 billion of new demand is going to come in off the back of these ETFs?
I mean, not to state the obvious here, but we are very far from these ETFs actually being approved. I mean, to date, there has been approximately 0 ETFs, spot Bitcoin ETFs approved in the United States. So I think there's a lot of steps that we need to get to before we can even start speculating on the price.
And I think we have other examples. You know, they use gold in part of this. You got to remember, when you want to hold gold, if anyone's ever picked up a bar of gold, it's a lot heavier than it looks. It's not like a bar of, like aluminum or something. It is heavy. You can't store it so easily. I mean, you could store it in your house. Not so easy when you have a lot of it. The whole thing about the gold ETF is the liquidity and the ease in which you can do it. Bitcoin's really easy to trade outside of an exchange. You don't necessarily need an exchange to hold Bitcoin, to be a custodian of it. It's a lot easier, and I think a lot of we've seen demand for Bitcoin-related ETFs already. What their maximum amounts have been. Granted, it's not spot ETF, okay, but the exposures kind of look the same and all that stuff, and it hasn't been 20 billion of anything. Look, it could be a few billion, sure. But, let's just chill out here.
It's a good point. Like, I feel like a lot of the optimism about these ETFs are predicated on the idea that it's like so hard to trade Bitcoin now, and this is going to make it so easy. And yeah, I think that's a good point. It's like, I don't know. Sometimes I think the difficulty is a little bit exaggerated.
Yeah,
that's exactly it.
I have family members who don't know how to trade Bitcoin, that's for sure. And they keep asking me how to do it, but and maybe this will help them. But for most people who can Google it, it's pretty easy.
All right. Before we get to our next story, I must note that Bitcoin is up over 20% since BlackRock filed for their spot Bitcoin ETF. That's mentioned in this report. Let's now turn to the state of crypto.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
NASDAQ is freezing its plans for a crypto custody service, which was slated to go live in the second quarter of this year. Joining us now is Moses Singer, partner and former SEC senior trial counsel, Howard Fischer. Welcome to the show, Howard.
Hi, good to be back. I was going to start off by saying, wow, it's a really interesting week in cryptocurrency, but I think that's the lead-in to every story or every week on cryptocurrency, the way things have been going the last year or so.
How it feels like every week is more interesting than the week before. I look forward to a boring one, and I think my co-hosts might agree.
No, I like guessing who's going to get indicted this week. That's my favorite game.
Well, there should be a pool on that. Yeah. We could probably create a securities product on that.
Yeah, maybe we could take.
Whoa! Gary, we're kidding. Yeah.
All right, Howard, let's talk about this news that came out of the NASDAQ yesterday, pausing on their crypto custody service. Talk to us about the significance here.
Look, NASDAQ has to be conservative. And as long as there is a significant amount of regulatory uncertainty about the state of crypto as to how it's regulated, whether it's a security, if it's a security, which government agency is going to be in charge of regulating, of getting records about it, of prosecuting violations. As long as that's the case, I think the major exchanges are going to be a little bit leery about taking any kind of regulatory risk. And I think NASDAQ's action is a reflection of that.
I have to ask this because the S in NASDAQ, last I remember, stands for securities, right? So that's kind of their business. So why are they so afraid? I mean, if anybody's going to do this kind of stuff, you'd think it would be somebody with the name security in their company. I don't know.
Well, I think part of the issue has to be that there is still a question as to whether this is a security. And as you know, there are all sorts of pending bills in Congress that would define it one way as a security, define it as not a security, define it as an accepted security, give regulatory authority to the CFTC, SEC, another SRO to be created. And so it's not the question of whether it is a security. It's a question of who decides that. When is that going to get decided? When are we going to have some regulatory certainty about this?
But one would think that of all the things, all the hurdles involved, that whether or not it is a security. So if it is a security, you got to be able to deal with securities. You'd think NASDAQ, that's kind of their business. That's something they can do easily. It shouldn't matter to them whether or not something's a security. I mean, if it is a security, if it turns out that crypto is the same as eggs in your refrigerator or something, it doesn't matter. They can kind of deal with it. They have the infrastructure. They have the regulatory approvals, all that kind of stuff. Why would they shy away from something that could be a security?
I think in some ways, ironically, the judge's recent decision in the Ripple case has created added levels of uncertainty because up until that point, the SEC had basically won every case or settled every case in which the question of what kind of assets were considered securities was determined. I think with the Ripple case, and that I guess we could call it a split decision,
if it's not a security, it shouldn't affect them, right? If it is a security, it shouldn't affect them. They have the infrastructure. I guess I'm wondering if is this sort of something they're saying to mask something else? Like there's some other concerns that maybe it's not so much regulatory, but there might be other issues.
Well, there certainly might be some kind of reputational issues at stake. I mean, one of the things we've seen is that a lot of the players in the digital asset space have been, how shall I put it, less than sterling when the full scale of the reputation comes out. Allegations about what was going on at FTX, for example, have colored a lot of people's view of the entire digital asset industry. So I think there may be some kind of concern about reputational damage and the effect that might have on NASDAQ. I mean, all of this is trying to parse tea leaves, essentially. Mm-hmm. But I think that part of it is that following the Ripple decision, there has been a renewed enthusiasm and momentum in Congress for some kind of bipartisan crypto bill. So part of this may be that seeing what's happened in that, seeing what's happening in Congress, that various actors are waiting to see if at some point, Congress finally moves and actually comes up with an agreed plan to regulate and to figure out who is going to have authority over this.
I mean, I feel like if that's NASDAQ's plan, they could be waiting for a while. but I guess the question here about NASDAQ is, what do you think the sort of symbolic repercussions are? Like, do you think this is going to scare away, other institutions or traditional finance, just because it doesn't necessarily send a very good message?
Well, it's weird because on one hand, you have the BlackRocks of the world saying that they want to come out with Bitcoin ETFs. So that is a form of institutional approval, which I think would make more nervous investors think, okay, well, if BlackRock is doing it, I guess it's good. On the other hand, we have NASDAQ saying, well, wait a second, maybe that's okay for BlackRock, but we're still a little nervous about this. So you're seeing a very odd confusion, which is actually not that odd when you consider that confusion is kind of the default state of how digital assets are regulated these days, at least in this country.
So NASDAQ previously applied for a New York Department of Financial Services to the New York Department of Financial Services for a limited purpose trust company license. Now they're saying that they're looking to get the necessary license. Any insight here on what kind of license they could be looking at or what regulators they might be working with?
I mean, I think anybody operating in this field is operating under an unfortunate circumstance of regulatory confusion. Take Coinbase, for example. Coinbase is regulated with the New York Department of Financial Services. They've registered with them. They have agreed to implement certain compliance regimes involving anti-money laundering and know your customer rules. So they're completely or working on being completely compliant with the New York state regulation. On the other hand, that didn't stop the US SEC from suing them. So because we have this very weird distinction between federal regulators and state regulators, there is this problem where people in the digital asset space don't really know what to do, because you could fully comply with what New York State wants you to do, but that's not going to stop a federal agency from coming after you. And until there's some kind of regulatory certainty, that's going to continue to be the default state of digital assets. And there is going to continue to be that kind of uncertainty until Congress finally gets its act together and says, okay, here's what we've agreed to do. That might happen. I'm a little bit more optimistic of it happening now that the Ripple decision has incentivized Congress a little bit more to act. But I wouldn't necessarily hold my breath for a bipartisan accord in Congress right now.
All right. Speaking of the SEC, there was an exchange between Senator John Kennedy and SEC Chair Gensler yesterday on why the SEC did not nip the alleged fraud at failed crypto exchange FTX in the bud. Let's take a listen.
Where's the SEC? I mean, this was an accident waiting to happen. And I don't understand where the SEC was.
So, sir, I would say that the whole field has hurt more Americans than it should.
Yeah, but I'm talking about FTX. I mean, we can look back at FTX. I mean, Senator Durbin made this point. And we have this elaborate, complex regulatory machinery, the SEC, which I support, which is supposed to guarantee transparency and combat fraud. And any fair-minded person has to look at FTX and Mr. Bankman-Fried and these kids and go, what in God's, where was everybody?
All right, there was Senator Kennedy asking Gensler, where was the SEC when this industry was imploding at the end of this year? What were your thoughts when you saw that clip?
And so this is, as a former SEC prosecutor, this is one of the things that always used to bother me. It's that on one hand, the SEC gets criticized for being too aggressive. And on the other hand, they get criticized for not stopping frauds when they began. I'm going to go back in time to April 2022, when it became known that the SEC had sent subpoenas out to, among others, FTX, and Representative Emmer, who was the chair of the blockchain caucus, strongly criticized Chairman Gensler for acting outside the scope of the agency's authorities and trying to strangle innovation in its infancy. So there was a lot of criticism at that point. And then when the FTX scandal broke, and kudos to your your shop for actually being the ones to break that story. When that happened, Representative Emmer went back on Twitter and said, what's going on? Where was the FTC? So on one hand, there's always this kind of push-pull dynamic between Congress and the SEC, where it's criticized if it's acting too aggressively, and then it's criticized if it doesn't stop fraud before it happens. So, this is a dance that the Senate has gone through numerous times with the agency, and by this time, all of the dancers know the steps.
Well,
so we ask this question a lot on the show, but most people don't have an answer, so maybe you do. The question is, everyone's like, Congress should act, Congress should act, Congress should do something. But like, what exactly should they do? There's so many like ideas being floated around, and like, what exactly should Congress do to address this regulatory clarity problem that everybody is complaining about?
I think there are several things that Congress has to do. The most important is determining which regulator has final authority, whether it's the SEC, whether it's the CFTC with an expanded budget, whether it's a new agency, whether it's a self-regulatory agency. Someone has to be tasked with being the cop on the beat. The second thing that needs to be done is come up with what I'd like to think of as a Glass-Steagall equivalent for the digital assets world, and that is that you have these entities like Coinbase, like Binance, which are trying to be all things. They're trying to be exchanges. They're trying to be clearinghouses. They're trying to be broker-dealers. And those positions, those roles have inherent conflicts of interest. I think there has to be some kind of rule or legislation that says that you could do certain things. If you want to be an exchange, and here's what you have to do. You want to be a clearinghouse, here's what you have to do. You want to be the equivalent of a broker-dealer in the digital asset space, here's what you want to do. But you have to pick your lane. You have to pick what you're going to do and to do that. And then there have to be various disclosures associated with what role you pick and what you're going to do. But of course, that's all easy to say because there are significant disagreements just on the first issue as to who wants to, who's going to regulate it. And, on one hand, you have Democrats who are saying it should be the SEC, and then largely you have Republicans who say it should be the CFTC. And a lot of the momentum behind stripping the SEC of authority probably comes more from hostility to Chairman Gensler than to any kind of structural view as to which regulator should be appropriate. But, until we get agreement on who should be the regulator, I think that it's going to be very difficult to figure out what the scope of those regulations should be.
Yeah, but I guess, it doesn't totally solve the problem because, there's a good chance that in that case, the SEC would be the designated regulator. And that's not really the issue here. It's not that people are saying like, oh, does the SEC have the power to do this or not? They just don't like what the SEC is saying. Like, that's kind of the core problem here, right? There's this major disconnect between the SEC and the crypto industry, right? About like the crypto industry basically saying that the SEC's view of securities is not compatible with digital assets, right? So just giving the SEC like fuller authority definitely would not solve that problem, right? It would just kind of like institutionalize it. So
I think further, the question of whether digital assets are securities is in some ways a distraction because we could agree to some kind of world in which, yes, they're treated as securities, but that treatment means that certain rules have to be implemented. So, for example, there has to be audited financials for crypto companies. There has to be, some kind of publication of, the various aspects of their business. There has to be some kind of reserves. Whether we treat digital assets as a security or not, that's only the first part of the equation. The hard part of the equation is saying, okay, if that's the case, then what's the next step? What do they have to do? What do they have to disclose? What measures do they need to implement? What kind of know your customer, anti-money laundering rules, for example, do they need to have? What kind of reserves do they need to have if they're going to have trading on their platforms? So I think in a lot of ways, the excessive focus on the securities aspect of it is in some ways a distraction from what may ultimately be the more complicated issues, which are, okay, let's say it's a security, let's say it's not, whatever the determination is, what comes next? And that may actually be the harder part of the process.
All right, Howard, we're going to have to leave it there. Thanks so much for joining the show this morning.
Oh, my pleasure.
That was Moses Singer partner and former SEC senior trial counsel Howard Fischer. Coming up, a conversation on the future of the metaverse with the founder of Futureverse right after this break. Welcome back to First Mover. Our next guest wants to combine AI and blockchain to build the infrastructure for users' experiences of the metaverse. Joining us now to discuss is the founder of Futureverse, Aaron McDonald. Aaron, welcome to the show.
Hey, how's it going?
Just wonderful on a Thursday morning.
It's 1 a.m. here in the future in New Zealand, Friday morning.
You are literally joining us from the future. I don't think your company could have a better name. All right. You raised $54 million in a funding round led by 10T Holdings. It also included participation from Ripple Labs. Tell us what you're going to use the money for, and also tell us about raising in the current state of the industry. It hasn't been easy for a lot of people to raise, and you have a success story here. So what's that experience been like?
Yeah, so what we're using it for is to continue to build out what we believe is the leading platform for the open metaverse. And that's kind of bringing together Web3 technology, world-leading AI content generation tools, and big brands and partnerships to demonstrate how the open metaverse should work through this technology and the Powered by Futureverse platform. So that's what we'll be doing with it, is kind of continue to build that out, continue to show and demonstrate that the idea people have in their head when they see something like Ready Player One can be true. In terms of the fundraising process, you're not wrong. It's difficult out there right now. We're really lucky to have investors who have strong conviction in what we're doing, that understand the kind of macro thesis around this space and know that, you know, markets come and go, but good companies that are executing well and building building real products are going to survive those times and come out the other side of these markets and do really well.
When you say real products, what do you do? Can you explain exactly what you guys do? I hear a lot of, I heard AI, and I know people want to put money in AI, and so that's exciting. And so I could see you guys getting a big valuation because you have the word AI involved in it. But really, what do you do?
Yeah, well, we build software that helps people build connected games, applications, and experiences, and that includes things like the Root Network, which is kind of our foundation blockchain, which is really being designed and optimized around making the onboarding journey for users really simple and safe into Web3. It includes a bunch of tools to help create content. We've been working in the AI space now for about 4 to 5 years. So we've got some really great tools that help making content simpler and cheaper. And then we have these great experiences like we're building with our partners, including FIFA, which demonstrates how that technology comes together in something like the FIFA AI League, which is a mobile app where you can control individual AI players, and those players themselves are NFTs that live on the blockchain, and you can trade those intelligent players and do all the other cool things that you can do with blockchain technology.
So it's cool. It sounds like you were already in AI. You're not just one of those companies that became AI, so that's so did you anticipate that AI would blow up to this extent at this period in time? I mean, was this sort of part of your roadmap, or were you just like, oh, wait, this is awesome, like we were doing this already?
Yeah, no, I think we had a thesis that it would become very important in the technology landscape and a big transformer of the way that people interact with technology online. And more specifically, our view of the metaverse is less about a game experience and more about how the internet becomes a more immersive and converged experience, so breaking down those user silos. If you look at something like the large language models, ChatGPT, etc., they're really doing that. They're creating a new kind of user interface to interact with data on the internet that wasn't possible before. And that is all part of this trend towards a more digital society, which you can call the metaverse. So it was a core thesis of ours. And in particular, we were really solid on the idea that as these digital spaces build out, there'll be lots of digital agents that interact in those spaces. So how can we create tools and protocols that allow communities to build, interact, and own with those AIs and have a stake in the way AI rolls out in society?
All right, Aaron, we are going to have to leave it there. Thanks so much for joining us from the future. We appreciate you staying up so late.
Get some sleep.
Thanks for having me on.
That was the founder of Futureverse, Aaron McDonald. All right, Emily, now we're going to turn over to you and chat about social media and payments. Telegram-based trading bots are quickly attracting scores of crypto traders. The leader of the pack seems to be Unibot, which launched in May and has briskly gained a following. This comes as Telegram merchants gain access to in-app crypto payments for the first time. Let's talk about this. So Telegram users have been able to send payments back and forth already. Now, Telegram merchants are able to accept crypto payments. Talk to us about this new development.
Yeah, so as you said, you can already send crypto on Telegram, but what's interesting is that it was not widely adopted. So according to CoinDesk, just 2 million of the over 700 million Telegram members were using wallet services. So this was like not a very popular thing, but now this being expanded to merchants, there's been a lot of hype about this. There's been a lot of conversations about this. As is the case with everything in crypto, there is controversy about this as well. In particular, there's controversy about how secure this product is. So there's basically sort of two sides of this. There's people on Twitter kind of saying that this is not secure and why would you use this because this is just not a secure way to transfer money. And then there's others who are saying it's basically a trade-off and that it might not be the most secure thing in the world, but it's okay for smaller payments or I think, do we have the tweets? You can kind of see just some of these complaints or some of the debate that's happening about this. And I guess like the counter argument is that it might not be the most secure thing in the world. That's Bobby, who's sort of saying that, it's okay. He's willing to make that trade-off as long as you're not putting serious money into it. But yes, it's an interesting development. And interestingly, this is not available to users in the United States. And I think this is kind of fascinating because this isn't even really like a headline here. This is just kind of one of those things that you would only know if you were a user in the US and you tried to use it, or, it's in some of the reporting. And I think it's just interesting because I feel like people are almost getting used to the idea of the US being ring-fenced in this way. And it's clearly problematic because Telegram is such a global app. And for all of these kinds of things, for them to work, you need kind of a global network. So for such like a big player to be excluded from this is, obviously somewhat problematic.
So I mean, just to be sure, it's not available even to individual users. Like, okay, let's say there's a guy that comes to my house and gives me a plant-based thing, and I kind of want to pay him for it. I can't use Telegram for that, correct?
I mean, Lawrence, you're welcome to try. All I know is that according to Telegram's terms of use, it is not available to users in the United States. And Telegram has had TON has had issues with the SEC in the past. I'm sure it's, somewhat related to that. But again, this is just an interesting thing. And it just is one of the many challenges of creating a global payments network, which is not available all over the globe.
Well, talk about geofencing. We don't even have Cash App here in Canada, so I can tell you we feel the pain. We still email money to each other.
Pelts. You don't even have cash. You just use animal pelts.
That's exactly it. Come up to the north where we just use pelts, according to Lawrence Lewitton. All right.
Pelt coin, yeah.
Yeah. I want to talk about this move to have like an all-in-one payments and messaging app. We had Brian Armstrong come out and say, Coinbase wants to build the next WeChat. We had Elon Musk say he wants to build the next WeChat. WeChat is obviously this massive infrastructure in China that allows you to do absolutely everything from email to chat to pay at a store, virtual payments. Talk to us about that race over here in the West.
Yeah, I mean, I don't know if I would call it a race because it's pretty slow. I mean, WeChat has been going on for years and WeChat is thriving. And, all these companies would love to have WeChat because WeChat is such an all-in-one app, right? I mean, you can do everything on it and everybody's on it and it really dominates the market. So yeah, a lot of people have tried it, but I think as we're seeing, is all of these different, there's the US, part of the problem is that there's just so many different apps, there's so many different companies, and they haven't quite managed to get everybody in one place doing everything on one app. And a lot of people have tried, but what we're seeing with all of these, there's so many interesting data points right now. I mean, there's Telegram introducing this, we have Reddit and Moon, we have Twitter now also trying to share ad revenue with creators. You have Nostr trying to use Bitcoin payments. So clearly, everybody's trying to integrate payments into social media in some way. But yes, nobody has come close to achieving what China's WeChat has done, which is kind of having it all be in one place and have it be relatively seamless. And I think seamless is kind of the operative word here. I think a problem with a lot of these is that the user experience is not that good. It's a little bit complicated. WeChat is simple, and that's one of the reasons why it works so well.
What the heck is Zapple? Explain Zapple. It sounds like a knockoff you buy on Canal Street. This is a Zapple phone. Explain this.
Okay, so this is just another one of these, crypto controversies. So basically, last month, Apple threatened to remove Damus from the App Store for allowing users to zap, which means, I guess, to tip each other with Bitcoin on content posted in the app. And now developers have said that they've discovered a way to kind of a workaround, which basically enables zaps via emojis. That is my understanding of the topic. But again, the larger picture here, if you don't want to get into all the sort of Zapple, vocabulary here, the larger picture here is, again, this is just another obstacle and this is just another pain point, which now is the App Store, right? So it's just basically all of these, a lot of these crypto payment attempts are just coming across obstacles in various forms. Either it's via Apple or it's via, some regulatory issues. So there's just a lot of issues in terms of getting a seamless experience for payments in these social media apps.
And Emily, just before we wrap, I think we should clarify, WeChat doesn't actually facilitate crypto payments, right? This is just fiat payments that WeChat is
Right. Thank you for clarifying. Yes, WeChat is basically, for those who are not familiar with it, huge in China, can be used for everything to, talk to your friends, to, book various appointments it's just basically the everything app, right? And it's used for payments, but no, not specifically for crypto payments.
And we should also clarify that Canada doesn't use any animal pelts for just beaver pelts.
No animals were harmed in the making of this segment. Okay, we are going to leave it there. Emily, thanks so much. As always, your segments are such a pleasure. Coming up, we're going to take a closer look at where Bitcoin could be headed right after this break.
XRP and Stellar Lumens are outperforming a still sluggish Bitcoin and other altcoins this week. It's the topic of my latest newsletter with the tie. I'm just throwing out a plug here. But more importantly, for now, joining us to discuss the crypto markets is StockCharts.com senior technical analyst Julius de Kempenaer. Welcome, Julius.
Thank you for having me, guys.
Happy to have you here. So, let's look at Bitcoin first, because that's what everyone really cares about. Well, no, they care about other things too, but everyone in crypto cares about the price of Bitcoin. So let's take a look at a short-term chart that you have here. It's the very first chart, if we can call it up. This is a 4-hour chart that we see here. We've been in a channel for quite some time since the announcement of a Bitcoin ETF filing by BlackRock, and it's just been flat at 30,000. We got a bunch of options next week. Guess what the big strike price is? 30,000. Tell me about this range here.
Yeah, it's interesting. I've been listening to your program since the start, and someone said at the beginning, like, "Oh, this was a very interesting week in crypto," and I was like, "No, it wasn't." And then you guys started talking about how it was like that for every week, and then I looked back and said, "Nah, it wasn't." There's nothing going on for about a month, at least in Bitcoin, maybe in some altcoins. But if you look at the, let's call it the mother of all crypto assets, basically nothing has happened since mid of June. And that's interesting because it's also interesting that you start with a 4-hour chart. I usually start with a longer term chart and then work my way down.
I like building up. That's my technical analysis prowess makes me want to build up from there because
if that's how you roll, then not a problem.
Yeah.
So from this shorter term picture, that range is crystal clear. I mean, 30K obviously is the psychological level that everybody's talking about. If you look at the chart, we've seen a few dips that go back to 29.5, and then on the top side, it's a little bit more vague. I mean, I call it like it's 31, 32. Like the recent range is pretty much like 31.5. So let's call it like 29.5, 31.5. That's like the range that we're in right now. And obviously, like the last 2 days, you can see how it's trying to build a new bottom, a small bottom. And if it goes above that, I think it's about 3,500, then it clears the way for a retest of the upper boundary. And especially with the longer term picture, is actually pretty good. Yeah, go on.
Let's take a look at the slightly longer term, not the longest term, because you had a chart that went back to like the Stone Age. We're not going to show that one, but we have another one here that's a little bit longer term. It goes back like a year or so. That kind of here we're kind of on the upper ends here year to date, aren't we?
Yeah, that's the daily chart, and so that area, that 31.5, 32.5, you would actually need to have that chart that goes back to the Stone Age to figure out where it's coming from, because it was a super important support level.
That was a low
back when it broke down. That was a major low, and in technical analysis, there's kind of a rule that all support becomes new resistance, and that's exactly what we're seeing right now. You can see how that area around 30,000 is playing up every time the market gets back into that range. Happened back in April, happened in June, and it's happening again in July. Yeah. So that level is important, but what's also important is that the longer that level continues to play a role, the longer that resistance remains intact. Once we break it, it's probably going to be a very significant break, because every time we test that level and we put in a new high, what that means is that people have been selling. There was supply going to the market, and more people are selling Bitcoin. And buyers were willing to pick it up somewhere in that range. So the longer that level stays intact, the more supply has been absorbed by the market. And as soon as that supply runs out and there is still demand, you can get a very aggressive rally as soon as we get above that, let's say 32.5.
We're running low on time, of course. We did want to show the rotation graph. I don't know if we'll have time, but just real quick, what does it say? What are we doing? Give me two coins that you think are doing all right here.
All right, the two that are interesting are Doge and Polkadot. They are pushing into that leading quadrant, and they seem to be putting in new lows. The general picture here is that Bitcoin is getting stronger. The altcoins are losing some of their relative momentum, except for Doge and Polkadot on this image.
Well, Emily's thrilled about that.
Actually, I'm curious why Polkadot. I just have to ask why Polkadot.
She knows why Doge, but no.
Yeah, I know.
This chart shows relative rotation versus Bitcoin, and tails, as we call them, that are moving in an angle between 0 and 90 degrees into that leading quadrant. That indicates that coin is getting stronger and picking up more momentum versus Bitcoin. And you can see that Doge and Polkadot are doing that. If you look at Matic and Solana, they're losing. So they already have had their run, and they're now losing relative momentum. Polkadot and Doge are doing the opposite.
In answer to Emily's question, it's because technical analysis doesn't care. You don't care about fundamentals here. It doesn't matter, and that's how that works.
Not at all. No, absolutely not. People like it. That's all that counts. People are buying it.
Julius, we're going to have to leave it there. Thanks so much for joining the show this morning.
No problem. Thank you.
That was StockCharts.com senior technical analyst Julius de Kempenaer. That's it for First Mover. I'm Jen Sanasi. Thank you to my co-hosts Emily Parker and Lawrence Lewitton. We'll see you tomorrow.